Why does this stock keep bouncing off $100? Why does that one keep getting rejected at 50? Prices don't stop at those levels by accident. These are support and resistance, price zones the market returns to again and again. By the end of this video, you'll spot them on any chart, read them, and know why these zones are the ones the market keeps coming back to. First lesson. A support or resistance level is never a single price. It's always a zone. Orders don't stack at one exact tick. Buyers and sellers cluster them across a small range of prices. Three things attract those orders. 1. Round numbers, 150-25, traders think in them. 2. Prior swing highs and lows, traders remember them. 3. Psychological levels, all-time highs, IPO prices, yearly opens, they carry meaning. When price enters one of these zones, orders trigger everywhere inside the band, not just at a single line. That's why a support zone looks like a band on the chart, not a line. When you mark a level, give it breathing room, a small band above and below. Master this one idea and half of technical analysis gets simpler. Levels are zones. So how do you find them? Look left on the chart. Find the points where price changed direction. A swing high is where price peaked and reversed downward. Draw a band at that peak, that's potential resistance. A swing low is where price bottomed and reversed upward. Draw a band at that trough, that's your support. Let's build one from scratch. A candle peaks at 46 and reverses. A few candles later, price rallies back up and stalls at the same price. Connect the two pivots with a horizontal band. You now have a resistance zone. And watch for wick clusters. When multiple wicks stop at the same price, orders are concentrated there. Those are your strongest zones. Not all levels are equal. 4 things make one level matter more than another. 1. Tests. The more times price has approached a level and held, the stronger it is. Each test removes the traders who don't believe the level will hold. 2. Age. A level that held 6 months ago carries more weight than one from yesterday. Older levels are watched by more traders across more time frames. 3. Volume. Heavy volume at a level means big participants defended it. Those participants will likely defend it again. 4. Confluence. When a level lines up across multiple time frames, its strength compounds. A level that's both a daily swing low and a weekly swing low gets respected harder than either alone. Tests age, volume, confluence, 4 markers. What happens when a level fails? When support breaks, the buyers who were defending it rush to exit. Selling accelerates. When resistance breaks, short sellers scramble to cover and new buyers pile in. The move higher accelerates. Levels don't just pause price, they amplify the move when they fail. The single best confirmation of a real break is volume. 1.5 to 2 times average volume means new money is entering. That break is real. A fake out is a false break. Price pierces the level, pulls in traders who believe the break is real, then reverses back. The tell is simple: thin volume on the break candle, a sharp reversal on the next. High volume breaks deserve attention. Thin volume breaks deserve skepticism. Now the most elegant idea in all of technical analysis. Role reversal. When resistance breaks, it often becomes support on the way back down. Here's the logic. Short sellers who fought the level are now underwater. They wait for price to come back so they can sell and break even. That creates a wall of buy orders right at the old level. The ceiling becomes the floor. This is what a retest is. After the breakout, price comes back to the broken level to check whether it holds inverted. A successful retest is one of the highest confidence setups in trading. The same works in reverse. Broken support becomes new resistance and a retest from below rejects price. Let's bring it together. Levels are zones, not lines. You find them by looking left at prior swing points. Their strength comes from tests, age, volume, and confluence. When they break on volume, the move accelerates. When they fail on thin volume, it's a fake out. And when they flip, the floor becomes the ceiling. On ArcAlpha, the platform marks the historical pivot levels you just learned to identify, the same zones the market has remembered before. Now you know why those zones matter. This is educational content and is not a recommendation to buy or sell any security.